All right, folks, trust you're doing good, guys. I'm Optimist. So, welcome to another YouTube video of mine. And in this video, I'm going to be talking about the importance of data and why data is very important into you being a profitable trader. It's a very important section of your life, I can tell you that. The point whereby you keep failing and keep failing and keep failing, but you are retaining data. And that is one of the things I tell people about trading one pair. Yes, that's the idea of why I trade one pair. When you trade one pair long enough, it's just that you just kind of learn how it moves and the price pattern. So this week I'm going to show you, or in this video rather. So in this video I'm going to show you the price action on gold that happened this week and how it happened exactly same time last year. Same fundamentals, same technicals, and then you now start to understand that everything is about data. Do you get? So let's go right to the charts. This is gold chart, as you can see right here. And this week we had price moving all the way down here. And then to the fundamentals, you can see how we arranged it. CPI on Wednesday, and then August 13th, we have PPI. Then I want to show you exactly what happened last year. Same time, same position. Now let's go to our calendar. Last year, 13th. Can you see? Tuesday, we had CPI first. That was what we had, CPI first. Then on Wednesday, there was no news release. Then on Thursday, we had PPI. Can you see? CPI came first and then PPI came on Thursday. It was released along with the unemployment claim. Then this week, what do you notice? CPI on Wednesday, PPI on Thursday. That's just it. That's the fundamental part. Now, the arrangement is not really relevant, but let me show you the price action that happened that week. So we are going to August 13th. Yes, August 13th. There was a lovely price action that happened, and then you will see how the same it looks with this week. So the reason why I brought you to the daily is to make you aware of this daily fair value gap. If you are conversant with how I trade, you understand I trade fair value gaps, the reaction around fair value gaps, and I will proceed from there. That's how I trade. So as you can see, we had the daily fair value gap. Now let us go to the 4 hours. So CPI was the one that released the fair value gap. So there it is. So this is the fair value gap. What you notice here is that we had a liquidity run right here. Can you see the liquidity run right there? And exactly on Thursday, when CPI was released, if we go to, we can't do 30 minutes, but we can do 1 hour. We can't really do 30 minutes, but we should be able to do 1 hour, 60 minutes charts. What you noticed was that early morning Thursday, you can see how price traded a high, and then we created the fair value gap, and then price rejected off that fair value gap just very early in the morning, and then we moved down, and exactly around 9 to 10 to 11, price started to move back into what? Into the other block here. So let's just pick this as another block. You know me, you know I love that precision. So this is your trade sell, and this is where your stops. This is where you want to put it, but literally you can actually put it here because you're trading the other block. And then look at price action until we got to a draw on liquidity, which happened to be a low that was created on Tuesday, I think. Yes, on Tuesday. Can you see that? That was a 6.38 move. I got that trade last year. Yes, I got it. I just don't have the chart to show you how I got it. I got the trade. CP and PPI came out around this time. It went up, came down. It was like yes, and then it started to come up, and then I was like, what's going on? Yeah, I remember I took partials like 3 times. The moment it came down, I took partials. It came back up. It came down. I took partials. Then I allowed the rest to run. And then this trade would have made me $4,000. But because I kept taking partials and taking partials, I was able to make, I think, 2003 or 4,000 or two. I can't remember, but it's around that range of 2003. It was a 50K funded account too. But I got payout sharp. That's all that counts. And then you can see the following Wednesday, we started to reverse the market. And then boom, that was how we ended the whole price action. That was how we ended the whole price action. Now I want us to follow the same price action and study how this week happened. So look at this. This is the week. What do you notice? The first thing I want you to notice is this daily fair value gap. It's still a fair value gap nonetheless. If we move to 4 hours, you can see within the daily fair value gap, what do you notice? Monday created this high, then Tuesday raided it thanks to CPI. Tuesday raided that liquidity pool, so that's a liquidity grab. And then it felt like we are going to come down. And then what happened Thursday? This was Thursday, can mind you. Thursday, we rated a high. Now let us do 1 hour so that you can see. Thursday, what time? 1 a.m. The first example I showed you, you notice is 1 a.m. too. So what else? What else about the price action? For you to notice that everything is just based on patterns. If you can recognize patterns, you will win. So very early in the morning when I woke up, I had these zones drawn out, these fair value gaps. 30-minute fair value gap this time around. And then I had another one here. So what do you notice about this? What do you notice about this? You can see how price mitigated it and moved down. So we add this as an order block. And exactly, price mitigated it after CPI came out. And PPI rather. Where's your stops? I told you your stop should be above the order block. Can you see this? My entry was down here because I was trading the whole week. So it was a little bit down here. Yes, 4392. But my stop was at the same point. And then I was aiming for the draw on liquidity. This equal lows that was created on Monday. I held it till Friday. But look at the entry, look at the news arrangement, look at the whole pattern. Can you see that everything is about pattern? If you join my mentorship, this is what we do every day. I try to show them the pattern. I let Monday and Tuesday work. And then Wednesday, I start to notice, oh, this is what is happening. I showed you the one on the FOMC, how I trade FOMC. If you've not watched that, go and watch that. I made that as my first video this week. I think just go and watch FOMC and possible. It's there. It's on my playlist. Go and check it. That is how you trade. Master patterns. Master how it's at. It's about doing it long enough. That's why you have to trade one pair, at most two. Master the patterns well enough. Keep a journal. You will remember. The moment it starts to happen, you start to. I think it has happened like this. I think it has happened like this. This trade around gave me almost 5%. Yes, almost 5% because I did not close at this TP. I don't really like closing TPs. I felt like it could keep going more. And the moment I start to see this low reacting, I had to close somewhere here. So that's almost 5%. So, guys, that's what I want to show you about gold. It's about data. This is why you shouldn't miss 500 hours with Optimist because we'll be trading together for 3 months. All the data you get is something you'll be able to add to your own learning. Yes, this is why you shouldn't miss 500 hours with Optimist. So, guys, till next time, I wish you good luck and good trading. Stay safe.